Good morning, family. I just love that intro so much. I'm always dancing to it. Even though I love it so much, AB is actually under the allergies this morning. I am not feeling too good. I was contemplating on canceling, but I can't cancel on the family. So I'm a man who keeps his words and his lives. But good morning to you, hello, cool runner. Mr. McCoy, good morning, sir. Cool runner, I see the BBBYQ, and I will get into that right now. Pop Loco, what's up, brother? How are you doing? Um, we're gonna talk about a lot of things that will explain to you guys yesterday action, and then better yet, today's crime that is happening. We're witnessing obviously crime on a daily basis, but this is on a different level to see exactly how. I'm going to explain to you guys so you can understand like how are people talking about market crash, market turn down, and all this stuff, and then this is what we're seeing is nothing but green. It's either that people don't understand what they're talking about. I don't understand what's happening, and it's fine. It's okay to get that impression, but I will explain to you why that is the case, and then I will explain to you how that is still actually making more of the case that the markets will indeed crash slash turn down. But stay tuned with this stream, guys, and you'll hear. We will go through a lot of things. We're going to explain what happened yesterday, what pushed the markets up yesterday, what is pushing it obviously today, and we're gonna go through many things, and we're gonna obviously watch some things that are unfolding in front of our eyes to see if there's any opportunities to actually trade. There's a bunch of them today. The markets are like on the options chain. I'm seeing crazy inflating in the markets, and we will get all into that. LHJ19, what's up? What's up? What's up? I appreciate you even more, sir. Thank you, my friend. Okay, so let's talk about first BBBYQ, which is Bed Bath & Beyond in the over-the-counter play. Now, here's the thing, Cool Runner. Is it worth getting into? I can't, really specifically say, yeah, go get into it or not. But looking at it, again, it's in the over-the-counter. So it's a stock that is very exposed to extreme volatility at any given time. In the same day, it could go up, whatever, 20, 30, 40%. And then in that very same day, it could also drop similar to that amount. Because again, there's a lot of parameters that just kind of don't exist in the over-the-counter markets where people with, let's say, big whales could just about do what the hell ever and get away with anything. So it's a good and a bad thing. It's a good thing if you ride that wave and know when to get in, and it's a bad thing when you get on the opposition of it because you will be mercilessly crucified. Looking at it, it's up right now so far almost about 5% on the day. I would say you definitely have to be able to look on the movements of the stock, seeing like for the past week or so, at least look at it. So we could see here, let's look at it real quick. There we go, belligerent ideas. We couldn't start the stream without you, my friend. It's not a full one. And so is you, Casey Hogg. It's your boy. Man, the SPY is ridiculous. It is indeed. I will explain everything that is happening with it from yesterday and today, and it will also get into a deeper case or make the case to why I've said over a month and a half ago. Do you know what's the funny thing? Over a month and a half ago, you guys remember this. You guys are my fact checkers. I was saying that the SPY is moving toward an all-time high. And at that time, everybody was on the opposition of that talk because we were in some red action at the moment. And people were whether it's analysts, whether it's big time professionals, or whether it's amateurs, we're all speaking that red, and all that stuff. And that's basically it. But why was I making that case back then? Well, as you can see that unfold, and we're not that far away from that. Now you're beginning to hear, as of yesterday and this past week, more and more people, like I've read this article about this guy who always calls highs on the SPY and the S&P 500. He's apparently some big shot. Now he's raising up his flag, talking about, yeah, get prepared for a new high for the S&P 500. And it's like, yo, you're a month and a half late. Like, it's easy to call it now, right here, than to actually see the patterns and the technicals that far out, about over a month and a half ago. And of course, everybody's jumping on that bandwagon now because that's what everybody's saying right now. So if you get the hint here, everybody's going with the trend. If everybody is saying this, everybody will say it. If everybody is wrong, everybody will be wrong. If everybody is right, then everybody will be right. And it's the opposite. If the results are the opposite, then people will be like, oh, okay, corruption. Because when they can't explain something, then it goes for just a blatant corruption, and just label it as such. Let me look at BBBYQ for Cool Runner real quick, family, before we move on with the show, just to see some things in it. The volume is pretty low at 1 million. You're talking about a penny stock here. I want you to remember, it's a penny stock that is technically, as you can see here, the average is 65.19 million for the last 3 months, the average volume on a daily base. So seeing this is not a good sign as far as for a day trade, depending on how you're looking at it. If you're looking at it for like a going long, this is where this part goes into play as far as the technicals. Let's just look at some of these things real quick. On the day, it looks like the parameters are high. It looks like it's due for a small cool off. Now we'll see how far or how much of that would be. That would probably just be a cent or 2 cents. And that's basically a big amount for this stock being at 38 cents right now currently. Let's look here. So as I see right here, this stock is actually in a pretty interesting situation. From the 27th of June, so 31 cents is a very important price. And in fact, even better yet, it's interesting that you asked this question right now. I don't know if you were hearing some other groups somewhere talking about this stuff. Maybe they're saying something crazy about this, stock right now currently. But here's what I would have to say to you, Cool Runner. 37.69, which is right now at 38.99, which again you could say 39 cents, is an important level of high resistance. This level, breaking this, and this is like, we're talking about the long, going long here, the long-term talk. Breaking that and actually retesting it and actually breaking right after it, continuing to go past that 39 cents would be, for me, if I am just so interested in this stock and I'm hearing news left and right, because I personally, I'm not following through with Bed Bath & Beyond anymore, so therefore I don't know what news are circulating. But just looking at the technicals part of it, it looks good. It looks poised for a higher run. I need to see the 39 cent level being broken and then contained and held, which again, you're right at 39 cents right now as we speak, 38.70. It did go up to 39.98. As you can see, that was the high on the day, and something is obviously, since it's the high resistance of a level, obviously a lot of entities do not want, especially sellers, do not want it to break past that with momentum. So I will continue to watch that level, watch it 39 cent, 40 cent, And then at that point, it will be clear for takeoff at least to the 56-cent level, which is, again, that's a pretty high turnaround from 40 to 56 cents on a a penny stock or a 38-cent stock. You're talking over 40 to about 45% move to the upside. Depending on somebody's position, that's a good turnaround. Like, put it this way, $10,000 means $4,500 profit just at the 56 cents level, assuming that the individual takes that position at 39 cents or 40 cents. I'm not saying or telling you or telling anyone to take any positions in anything, but this is just the way that I see right here. That's an important level to break. But keep in the back of your mind that it is in the over-the-counter market, which means whales could come in and flush it down at any given moment, so that when it does break out, it's always crucial to have stop loss slash take profit levels, because the mindset that we, like many of our family members, are walking in with the meme stock movement, like, hey, to the moon stuff. That is all right and all. It's not like that is wrong. When stocks squeeze. But what I'm trying to get to is, once you are confirmed to be into a pump in a stock, then you need to have stop loss slash take profit levels, because you can't walk in with a plan saying, I'm gonna wait for it to go to all the way to the top, whatever that top might be, and then write it down when it's coming right back down, then I'll just sell. You don't know how quick that drop is going to be, or how aggressive it's going to be. It could be a falling knife, and a falling knife, there's no way you can catch any orders. It will break past through anything. You're not even going to have enough time to set a sell order, and basically get through it. Even if it was a market order, the price might be super volatile and drop so fast beyond it, and now at the end you watch the stock go up and watch it go down, and now you're trying to say, at least at some point you'll get into a position where you're like, oh, can I at least get my money back, please? And you don't want to be into any of that. So take your profits, listen to obviously whatever news and rumors that you're hearing, and then ultimately rely on your your technicals ultimately, because rumors and talks, who knows whose agenda is being pumped. Like, somebody could be just trying to pump and dump, and they need people. They already took a position in an earlier stage, or some people could be telling the truth. The only thing that will verify things for me is my own findings, not necessarily just what they're saying. It's good that the news is turning my attention to this. That's the way I say I approach stocks. And then after it turned my attention to it, now it's up to me to make my final executive decision based on my findings, my technicals, and all that stuff. So I'm going to need to see this, like I told you again, 39-cent level being broken. And then continuing to make higher highs and higher lows. As you can see here, that's pretty evident. It makes sudden pumps. Again, since it's in the over-the-counter stock right now, currently, unfortunately, it used to be a company stock, Bed Bath & Beyond, just in peace. Every time you see there is like a pump, almost on a monthly base, there is a random pump. And then there is, of course, a reconsolidation and a cooling off. However, that cooling off is not lower than the previous lows, especially since June 22nd. So that's a very interesting thing since last month, basically. I will keep my eyes on those levels. 39 cents would confirm a higher high, holding it, then perhaps seeing where it does come back down. If it respects 39 cents, that means it's actually not just pumping, but it's squeezing, because it's supposed to actually come right back down to about 33, 34, 32 cents before it actually makes another run to the upside. If it's moving on regular liquidity and regular pumping, but if it's actually squeezing, then when it breaks 39 cents as it is right now, it would need to actually, if it's squeezing, then it would respect that level if when it cools off, and then go right above it. It won't even come down to the 33 and 32 cent range. Plus, one final thing to keep in the back of the head is, especially in a pump stock or stock that is very volatile or squeezing, if I see that that's the case, I always understand that one, where my stop losses will be, which will be below, always below the 50-day moving average by a good grip, so that it does not, the market maker does not hunt my order out of the way. So watching here, this is my stop loss would be somewhere around here in the 26-25 cent range, which actually hovers right at the 200-day moving average. This is where I would put a stop loss for myself at. And you also got to take that with a grain of salt, because as you can see here, there was 2 points where there was liquidity grabs that happened, one on July 7th, and then the other one was July 11th. As you can see, the candles ended here. However, that wick ended down here, which means the price very momentarily reached all the way down, which is what we call liquidity grabs, and pushed right back up. So it took all those stop losses out of the way, and then it went back up, and those people were most likely saying, oh my God, man, it went up right after it took my order for a loss. So it's crucially important to keep that in the back of the mind. Reason why it's here, even though the stop loss did, for in this sense right here, come down to here and grab them, is because I'm looking since July 11th, looking at these wicks up here. When it rebounds, if it respects 39 cents and it continues to go up at the end of the day, then I would definitely be okay and comfortable with the 25 cent, 24 cent stop loss. And at that point, it's being safe and covering my back in case whatever happens and it goes right back down to, like 18 cents or whatnot. As you can see here, the 52-week low was 4 cents. I doubt that that's something that will be witnessed yet, just now. It's crazy to see how that kind of bottomed in this last, like, June 15th or here, June 14th. And since then, it's been making a complete different trend on the stock. Similarly, look here. If we were to take it back a little bit more, and this is, I promise this is the last what we'll cover, but I want to make sure I send the family on not so terrible route. Look here how it was making higher highs and higher lows, then it consolidated and it made another run to 35 cent, then it consolidated, and then it had a massive dip to that 15 cents range, 17 cent range, and then it ripped up higher than this previous high. So if we were to do something like this, as you can see here, you can clearly see that the price is actually in an uptrend, and it officially got confirmed on the 26th or 27th of June. So be careful with that. Day trading it, I told you the case right here, how I personally would go about it. Going long, I also made the case, and please be safe out there, and hopefully this answers the question, my friend. All right, wow, I missed a lot of things in the chat. Let me take a puff while I'm reading. Lego, my weekend starts and ready to make some cash. Sub AB, like Mike said, Barbie is the swan we need. Yes, we do. I still remember that episode, was amazing. Man, the SPY is ridiculous. Yes. I'm gonna look at it right now. I'm in it for hopefully a buyout, something going behind the scenes. Yes. Trying to squeeze some cash out of the SPY today. You're not gonna have a rough time, my friend. I'm telling you that. And again, not advice, Pabloco. Thank you, Mr. McCohen. Yes, hit that like button. Get more and more family members and amazing people in here. Um, what is next on our docket? Okay, I just filled an order on Laser Luminous Technology. Okay, so right now you were also watching and we're witnessing Carvana squeezing out of the world, right? Let's look at Carvana. Bring up Carvana. I know many of you are looking like, look, 27%. The high was $54. The low is 47. Right now, it's dancing in this range. Hold on, let me reset this chart real quick. Carvana, as we spoke about before, have officially made that turnaround back in May 10th, May 9th, as it became into a buyer's market, let alone like rather than a seller's market. And since then, it's been making higher highs and higher lows. It's pretty clear, to see here. As you can see, why am I saying that May the 5th, the 9th, or the 10th? Because it made this crossing of the moving averages back here. And then let's take away the moving averages out of the picture real quick to see clearer. Since then, you've seen higher highs. Yep, it's confirmed. And then we see higher lows as well. See this? It's constantly going up, which again respects that theory of a squeeze into a stock. And clearly it's up over 800% on the year, which is mind-boggling. And we'll talk about, you're looking at it and people are saying, man, it's squeezing all right and all this stuff. Now, is this a real squeeze or is this a manufactured squeeze? That's what people are, some of you are probably asking that question. Here's the answer to that. This is 100%, in my humble opinion, a manufactured squeeze. And here's why. We'll go on to look at Carvana's earnings that they reported this morning and wait to be mind boggled. So, Carvana reported a quarterly adjusted loss of 55 cents per share for a quarter ended in June. The mean expectations of 20 analysts for the quarter was for a loss of $1.15 per share. So this is why this stock is squeezing. You're gonna laugh your ass off, I know, because I was too this morning. The reason why it's pumping out of this world is because the expectations for it was to lose a lot more. $1.15 per share. Instead, it only lost 55 cents per share. So in that sense, what? Yeah, that's bullish. Let's squeeze. In what world does that make sense? Of course it doesn't. However, this is why I call this a manufactured pump or squeeze, because there's no sense in a loss is a loss. A higher loss and a smaller loss. I know in the corporate world, they will be thinking more like, well, that means it's getting better and better. The business is getting better and better. If it's not losing as much, well, guess what? AMC is getting better and better, and it's getting close to. I know a stock that some of you might know called AMC that's getting better and better, and it's not operating at a loss. And at the end of the day, you have the stock getting on the quarterly earnings, always improving. And now this last one could be actually at a break even or even at a small, slight profit. And yet it is not getting 28% pump on the day of the earnings or any of that stuff, right? Some of you might know that stock. I don't know. Some of you. Put in the chat if you know that that AMC stock. Here's another thing why it's also not really the case that, the expectations were much worse losses. It's less losses, which means the business is getting better. No, it's not. Here's why. Revenue have fell 23.6% to 2.97 billion from a year ago, expected at 2.59 billion. So another massive, I don't know what to call it, bombardment here. So you want to tell me that the 2022 was the bear year of the most bear year of recent memory, the most recent one. And in 2023, what is supposed to be where the industrials and the S&P 500, which we'll get into the industrials a little bit down the show, we'll talk about that a little more. All those are doing either all-time highs or damn near all-time highs this year. And you want to tell me this business right here, Carvana, is squeezing because the losses per share were less than expected, but on top of that, the revenue have fell over 23, basically 24%, and that's supposed to be good news. Giving you more. The mean earnings estimate of analysts had risen by about 37.2 in the last 3 months. So they're here trying to justify their ranges. So basically, because of the conditions of the markets, that's what they're telling you, that these analysts are just incorporating a wide range, 38% rise in expectations. So if your expectations as an analyst were, let's say, are already off, as we can see, they're already off. I don't know. Like, I would love to be an analyst because I could get paid so much to be so wrong, right? Any of you would love to. Shit, all of you would qualify to be analysts. We all would qualify to be perfect analysts because we don't even have to really look at the business. In fact, we probably will be really bad ones in reality because we would look at it and call it as it is. And that's not what analysts get hired for. You need to be bad to be a good analyst. So if you're looking at something bad, the mean expectations for now for analysts, they're given a pamphlet and being told, whatever is bad, raise your expectations 38% of the time, however way they gauge that expectation. And in the last 30 days, there have been revisions of earning estimates. So basically, this is a plot for a wide, this goes into why you're seeing the entire markets, family, being pumped and manufacturally flown left and right into higher and higher and higher ranges, because you're watching the stock costs or any stock just about pumping and you're like, wow, it's a bull market. Well, when your pamphlet is given to you from these unknown analysts per industry, like for banks, it's investors, it's banking investment analysts, and all of them are given instructions saying, hey, raise your expectations. So if you're told to raise your expectations, no matter how terrible it is, imagine this. There's a fire, a house is burning, a firefighter is supposed to go, and the fire department is telling them, when you see a fire, if it's burning everything down, just say, look at it and say, give us an estimate that is much better than what the reality is. Much, much, much better. If 38% of the house is burnt, then go ahead and say that only basically 5% of the house is burned. Is nothing, just the door, just the porch is burnt. The rest of the house is perfect. And based on that, apparently the markets were all these corporations will all go in there and say, oh, wow, yeah, that's really good. Let's go in and put millions of dollars in these stocks and in the market in general. Well, when it's a manufactured effort on a broader scale, clearly this is how you see the stock market being manufacturally pumped. Now, here's the last nail in the coffin. The company reported a quarterly loss of $58 million. Okay. Is that the last nail in the coffin? Let me look, see if there's anything else worse. That's basically all we need to look at. And then the Wall Street median 12-month price target for Carvana is $11. Do you see what is Carvana at right now? At 52, eventually at some point it was at 54 and perhaps could reach that again. However, this for AB, and again, with all my heart, I am not a financial advisor. I will not be giving advice to anybody. Do not take any financial advice from me. But for AB, this is a very, very simple put opportunity for going long. So I'll go long on puts, not go long on calls on this opportunity, because this thing, I mean, again, it could continue to go up. It's very volatile. We can't call out exactly when. You could have the best idea, like by seeing this, the parameters are extremely far from each other. The We could add even some other metrics like this. Look at the Bollinger Bands and see that they're extremely expanded right now. So it actually is a who knows moment of what could happen. So if I'm going long on puts, I'm waiting to get confirmation first that we meet the 50-day moving average again, which we are very close to, but on a longer times frame. And at that point, breaking underneath it, that's when I would know that we are making another, as if you can see here, this is where this peaked, where this is where this peaked, this is where this peaked. So I would rather, since I see this as a high demand zone, this right here is where the supply and demand, or the market sees at $36, $37. They see the price of Caravana being a good cheap price. So if I'm going long personally on puts, when I see it hit the $45, $44 level, this is when I will be a little more interested in basically going completely long for a long time. Puts out of the like, it can't just be next week or next day or next month, because what you're playing technically here, what I'm playing technically here, is the trend change. The trend change is not going to come right now. It could come next week, this week, but we can't gauge that. No one knows exactly the future, but I'm definitely working with valuable intel here. The fact that it's a terrible business, it's losing year over year, it's still also bringing in less revenue and selling less and losing more money still. This is a no-brainer. This is a failing business. It is not a profitable business. So therefore, the only thing that could save this business out of the pits of hell is some sort of acquisition. But in my humble opinion, why would I want to buy a losing business? Why wouldn't I just buy it for free? You see what I'm saying? So that's basically where we at with this stock family. We got a lot to talk about. We got to talk about what happened yesterday, what happened with some of these banks. Crazy stories. You guys are all gonna probably love this episode today. We're gonna look at our beloved SPY and see obviously also what it's doing. It's at 455 again, consolidating. Today's low was 455.01. The high was 456.34. It looks like it's still poised for more and more action for the meantime. But we need to see when this run ends. It looks like it's still in the beginning of it, so we might have another either today completely a pump, and then perhaps Thursday and Friday might be consolidation days. Maybe Thursday would be another pump day based on Tesla's earnings. And as I said yesterday, I'll be looking for today to see what happened with Tesla. And look at this, guys. It's already up at 2% almost. Right now it's dancing with the high of the day, 298. I would not be surprised if it breaks 300. Remember, the 52-week high is $314. This means that after the earnings, this could easily be broken. Now, I said that I will be looking at Monday and Tuesday to get a better idea on what to expect. And it looks so far as in they're already incorporating most of what the news are going to be in here. So by before the end of the market today, you might be able to see something wild, so that most of the volatility tomorrow could be basically kind of siphoned, so that people who jump in YOLOing could get basically massacred. At this point, it's almost like a safe thing when people look at it, because if you were to go look at the options chain, it is massively inflated. The premiums are sick to see how high they are. 1 second, I need to look at something. All right. Palantir is ripping too. Let's look at Palantir. I have it right there. It's up 4% on the day. It's dancing with the high of the day. Let's see. Volume is at 33 million. The average is 77. It's not too bullish for me yet, Pabloco, but here's the but. It depends on if this volume continues. For now, 33 million and it's only 1045, 1042. That's quite bullish. But I know how the market makers and how the market operates. It could be like this, and then suddenly you'll have a stretch of 2-3 hours of like a ghost town with nothing. It looks like this is actually expanding right here. This is the top of this. It is looking like a good play. It was always a good play as far as Palantir. I love it since literally, like, I think it was I used to day trade Palantir back in 2020 and 2021 because he used to get a lot of like contracts from different entities, like the government gave it a contract back then. I remember. As we can see here on Palantir, it went up on the bullish trend on May 11th, and since then it's been up. It tried to retest and break the 200-day moving average, as you guys can see here, but it did not successfully do so, and it bounced off of it. So right now it's in a bullish trend. Where will it go? That's God knows where will it go. As far as right now, that's all I could see. I could see it moving up higher, as making higher highs and higher lows from this new trend right here after retesting, which is a perfect area right there to enter after seeing it go right back up. So right at the upper 15s, 15 and a half and up, this is where if I was to get into Palantir, I would have gotten in. Right now, to me, it feels like, because again, I don't trade emotionally. I would not be chasing this since it is at a point of the higher high than this point right here. So anything above, for me, anything above 16 and a half cents, it's kind of like chasing. As you can see, it's also at its upper Bollinger Band if you use the Bollinger indicators. So this is me just waiting for a retest now. It could continue to go to 19 or even 20. I could care less personally. At the end of the day, I'm trying to get into a successful trade, not chase one and end up getting dumped. You know, so like I would be waiting for a retest of some sort, see where this retest lands, and perhaps I would like to see if it meets, it continues to make higher highs. So I would be extremely, moderate with my expectations. Instead of expecting it to go right back to the 15s and the 14s, if this bullish indication for me is enough, I'll be looking in the $16 range, in the 16 and a half to $16.90 range to get back in and hope. Obviously, at that point, there's that word again, the hope. Watching it retest that 16 cent and bounce off. If it does bounce off, that's definitely where I will try to catch it. That's why I said 16 cents, 16.50, 16.90 is when I will be catching it to go back up, because I would have had my confirmation at that point that this stock is bouncing right back up again, and the market is incorporating the buy signal that Palantir is good at 16.50, is cheap at 16.50 or at 16.90. Therefore, at that point, I don't need to be chasing anything. At the end of the day, I need to make sure that what I'm getting in is the supply and demand zone for each cycle. So, for example, over here, we can see that this could be the reaching the supply and demand zone, or like the sell zone on Palantir in this area. This could be the top right here somewhere in the 19s, and then it could cool off for a bit and then come right back down to reconsolidate, maybe at the $16 range, as I mentioned, $16.50, $16, and then the market would tell you then, is this going to be a good price or not if it retests and bounces off of it. If it doesn't, I do not want to be getting in at 19 personally, and then watch it retest 17 and 16. And now I'm trying to average down And the worst news could be is if the end of that movement and a new cycle of a bearish cycle happens, if this 50-day moving average was to cross the 200-day moving average back down, that would result in a death cross, which at that point will indicate that this is indeed the end, and now it's going to be a seller's market. It could drop right back down to 14 and 13. And the worst case scenario here is that even if that doesn't sound like many dollars, but depending on how big your position is, still in the red, and you will be in a held position to where you will be long holding a bag on something until it goes right back up again. Now, if you see this company as a great company, you're down with it for years and all this stuff, then it would like most of this talk would not matter much to you, because here's the thing: if you go back to 2020, every stock dipped. Even Tesla was in the $30 range. And, you know, you all are probably like, what? Tesla 30s? Yes. Every stock was down in that shutdown of COVID. So was Palantir. However, when this topped, it was always dancing with the upper teens and the $20 range. I remember the movement of the stock. It's always been in these ranges. So it's very crucial to see, for me, if I'm down with this company, I'm going to trade it or invest in it on the lower end of its trading usual. And I'm talking about for years here. And then if I'm betting on it long for a long term, like retiring on this company or something like that, you never know. This is actually, I like Palantir as a company. But if a person is taking it that serious, then I would be also interested and moderate my expectations of how much I put in, because if I want my investment to grow, to perhaps retire on, then I will need to see something a lot more crazy than that. I need to see that volume change, the average. I need to see that change. I need to see it in the 30s. That's what I'm trying to say. I need to see it take the next step forward, because the company technically is not growing. And I need to be able to see that. Now, again, small day trade or short-term opportunities, I believe that I made the case, my case of how I go about my things. And hopefully that would have, you know, I don't know if it was even a question, Pabloco, but it answers it. It wasn't actually a question. You're just saying that, and it's true. It is ripping. Let's see where it goes. We have a good morning report. We'll go down 10%. Bro Cape, IV crush on Carvana. I would not touch it. Yes, indeed. Good morning to you too as well, my friend. What price does it short squeeze? At what price does it short squeeze for Carvana? Wow, you bought Tesla at 30. Well, there you go. I told you, you're just saying to people that you're broke ape, but you're really not. You're wealthy ape. Just don't know it. Or you do. You're just misleading people so you could keep all the gold diggers off. All right? So I don't get the question, Broke Ape. At what price does it short squeeze for Carvana? You're living in it right now, I believe. You're living in it right now, seeing it in these crazy evaluations that it rightfully does not belong in. Seeing it now, like, look, it's making another run right now. Let me remove these bands and everything so that you guys can see it even clearer. See, this part right here shows this huge gap on the day from 39 to 53. That's basically a squeeze right there. Anybody who had call options yesterday on this is laughing all the way straight to the bank today, right? And the crazy part is, here's how, when people say, and I'm one of them, someone always knows ahead of time. Here's what, while that is true, here's the only thing you needed to know. And this was public info. Think of this. This was public info. You just had to download it in the right sense. In the beginning of the quarter, I just mentioned this a little bit earlier, the expectations were given to analysts and grading analysts to upgrade their expectations by over 38%. Now, a trader who comes in and says, you know what, like smart money traders will come in and say, so that means they're supposed to call bad good and very bad not that good and extremely bad okayish, like it's risky. You see what I'm saying? So technically, in other words, nothing is bad this quarter or in this earnings season because all the expectations are told to be highly elevated. So as far as looking at the IV broke ape on a day like this, this is a good lesson for AMC, by the way. Not that we would be looking for something like this here, like this run, thinking that it's a short squeeze or some MOAS or whatever. But for Carvana, it's much more that it could hope for. You got in days like this where the volume is out of the world. Again, the moving average of in the last 3 months was 28 million. It's been less than an hour and they're already at 62. That tells you they're already double, the triple almost the amount of volume in 1 hour of the float, which again, the IVs will completely get crushed in days where stocks squeeze. Let me take a puff 1 second. I always waste my hookah when I mess around with you guys. And my coffee gets cold. Okay, I needed that one. He's like, don't tell anyone. One dude is up 75K swinging Carvana. I wish I was paying attention. Yes, much love to that person. I hope that they enjoy their every single penny of that. Much deserved. Doing great right now with swing play on US Bancorp. All right, which will take us soon into the next topic today on what happened yesterday with earnings. Talking about Bank of America, we're talking about Morgan Stanley and Charles Schwab, and how that actually pumped this buy. As you can see, guys, right here on the SPY yesterday, we had this. This was at the open. We had a massive, where was it? Sorry. Yep, right there. At the open, we had a massive drop. And then right off at this support level that we got drawn right here, which, by the way, this level was drawn here from like a week ago. So you guys remember this level. It used to be a resistance level. Now it's support. And then it bounced right off of it. It's like AV knows the future, but he doesn't really, guys. I'm just messing. But it bounced off of this line, which I had marked as resistance and support. Now that it's newly support, because it didn't break past it. And then Bank of America, Charles Schwab, Morgan Stanley came to the rescue. And boy, in such a really funny way, similar to Carvana. And we will talk about their reports right now. But as soon as those reports were made, which was in the pre-market, and a couple of other ones were throughout the market as soon as it opened, it had a complete rebound, and it completely kept running all the way until the end of that cycle on yesterday, which was right here in the 54.19, and now the SPY today ripped up to 56. Right now it's trying to retest this range, I think, because there's a gap right there that needs to be filled. There's many gaps that gotta get filled. So right now this is crucial for the SPY to see if it retests this and break below it. That means there's going to be some sort of correction going into tomorrow, or if it will bounce right off of this level, if you even get to it. So right now I'll be watching for this strong reversal, if there's a strong reversal, see, this acted as a cooling off of the RSI on the day. So this technically, for many people out there, is a great spot to enter for the upside. Why? Because all the indicators are cooled off, slash this is coming back to test even below the like getting exactly almost to the open point. So this could be the low on the day, and the market could be telling you, of course, like yesterday, that this is the bottom, and we're not going to retest this support or resistance. We're going to keep it as support, and we're going to bounce off from here. But it's interesting to see because we have a high here, we have a lower high here, and now we're trying to bounce back off. If this does not end up higher and a full rebound like yesterday, if you see something like this happened yesterday, and then it ended up being like this, which is very, very close to this currently. So let's see if that ends up being the case. If not, you will definitely see a retest. Like the indicators will get hot, the buying pressure will try to come in and support and say, no, keep pushing it up, keep pushing it up. We don't want to bring it down. But then if that's not enough, then it will come right back down. It's going to be interesting. I have to also personally look at the options chain to see what interest is out there on what strike prices. And as I look here at, we're at 455, 27, 13, 9, and then 58, 12, 12, 19, 16. And there is a lot, obviously, more calls than puts on the market. It's a bullish day. 56. This thing is showing right here that they're gonna do their best today to try to get it to touch the 456 and 457. It been through the 456 range, so we know that's a beat already for them. But I would be looking for a reversal that will launch the SPY through the 457 range, and then tomorrow with Tesla's earnings, we know that it already had a few weeks ago reported that over 86% delivered on vehicles. So the report is expected to be extremely high, and if it's not, it's going to be the expectations, as we spoke about today, are supposed to be higher. No matter how terrible it is, just make it better by 38% or 40%. So this should be going to the 56 range, 57 range, and then tomorrow could possibly launch it into the $460 range. That's how I see these things, at least for now, folding in front of us. So that will remain to be seen. Let's see if that does check out through here. Maybe this was just a liquidity grab right there, and people collecting profits, big players collecting their profits up here on the day, and now and of course the market maker trying to make sure that other ones other than themselves do not get too much money on the call side, grab a lot of liquidity through here, and then bounce right back up and cool off all the indicators. We'll see. Bob Loco is telling us that the SPY is dumping. Well, let's see. Let's see if it actually dumps. Let's look at tomorrow, guys. What brought the SPY to these levels anyways? What elevated the SPY? So what elevated the SPY yesterday in the S&P 500 was the earnings reports on the industrials and then the banks. You talk about Bank of America, Charles Schwab, and all that stuff. And so get ready for a laugh, all of you, because just as you probably laughed if you chuckled at the Carvana situation, then you probably will have a huge laugh at this one. Again, this is making sure that the market is again fully manufactured, and it's a manufactured pump throughout the market, in my humble opinion, which falls great from over a month and a half, 2 months into my expectations. Like I told you guys, these things were like public news. You had to download them, or mentally you had to understand them as such. You had to dive, like you had to expect, see, okay, they're told to put up their expectations and highly elevate their expectations, no matter how terrible the case is. Make it 50% better, 40% better. It tells anybody at that point that, hey, you know what? This means that we're going to be, no matter what is going to be up, unless something is saying Chapter 11 bankruptcy. It's going to be moving up. That's what that tells you. But a lot of people don't pay attention to these things, and they pay attention. They're continuously just held into the action, and they're paying attention to the action as far as the trading and all that stuff. When I personally say sometimes pay attention to the news, the rumors, and all that stuff, don't look at just that company's news. Look at the overall trend in the market. Once you hear that the analysts are told to upgrade their expectations by a certain amount, then at that point you should already download that in the back of your head as, oh, they're told this is basically pumping the markets. And how does that work in the case of, let's say, Bank of America? All right, let me look right here. And read off the report for you guys. See, you got Oppenheimer is setting Bank of America and maintaining it at outperform. Well, their Oppenheimer is given their expectations to be put up. BMO Capital analyst James Fotheringham maintains Bank of America with a market perform and lowers the price target from 41 to 40. Yeah, and it's at $31. So as you can see how the pumping works. Let me get just back real quick. Right there. Maybe this is the one that I need to see. Okay, right there. So what happened when it reported their second quarterly earning? So Tuesday morning, the company said quarterly revenue, this is for Bank of America, increased 11% year over year to $25.33 billion, which beats estimates of $25.05 billion. Bank of America reported quarterly earnings of 88 cents per share, which also came in ahead of the estimates at 84 cents per share. In its global wealth and investment management, saw a client balance climb 8% during the quarter, driven by market conditions and positive sentiment and all this stuff, which again, right there, this is your first red flag. The market conditions is what is setting this case to be at this range. But this is just the beginning, guys. Average deposit balances, here's where things become interesting. And by the way, this is a much better one than when we get into Charles Schwab. Wait till we get to that one. The average deposit balances declined 1%. That's a lot when you're talking about billions of dollars. Sequentially, and 7% year over year to 1.9 trillion. So, wow. And deposits are going under and being flushed out at 7% rate year over year. That's huge, guys. And yet, it is considered great news. Those deposits are very stable and they represent a dominant part of the money. This is where the CEO, and this is what the CEO said, this is where the CEO comes in and says, hey, no, we're great. To the moon. We're not going anywhere. He probably took a page out of Adam Aron's book in this case. Wink, wink. Although credit cost levels haven't returned to pre-pandemic levels, the 2019 levels were 40 or 50-year lows. And then they stressed adding the bank is seeing a normalization. Well, isn't that the case for a couple of stocks that we know with AMC and GME? As we are close, or even last quarter, we did better than pre-pandemic levels. In our case, at our level, see a lot of people, and unfortunately, these are people within our community. People are from within our home, our people that you consider backers of AMC, content creators who support AMC supposedly. They say that we are not performing. So far, I'm reading off to you guys companies that are, one, Carvana is squeezing out of the world over 800% on the year. On what? Fugazi. Terrible stuff. Terrible shit that don't exist. That's one. Let's go to a bigger industry. Let's go to the banking industry. Let's go to Bank of America. And we still didn't even get into Morgan Stanley and excuse me, Charles Schwab. And those entities are also losing their asses off, and they're still performing, all of them below pre-pandemic levels. So what is the difference here? Why is it that only AMC slash GME or meme stocks are held at a much higher expectation? I need you guys to understand this part I'm about to mention here. Why is it that only these meme stocks are given a much higher expectation than the overall market, even the biggest of the biggest entities in the industry or in the market as a whole? They're all expected to, like you see that Bank of America did terrible. It's okay. That's much better. It's still not better than pre-pandemic levels, but guess what? It's only 1.9 trillion. But when it comes to AMC, you got them saying, we're still not performing as pre-pandemic levels. This is a dying business. It's worth 1 penny. And that's when you get even, unfortunately, some of our supposed content creators who support this BS and drink that Kool-Aid juice, and they come and they share it with the rest of the family and the community, helping more confusing, facilitating more and more and more red pill in consumption and whatever you want to refer to it as, and drinking the Kool-Aid from these people who are mean to do us harm, of course, 100%, and then they come and they spill it over and pretend to be venture capitalists and gurus who understand the market. And yeah, I've been trading this market for about 18 years or 25 years, and I can give you these fundamentalists talk and all this stuff. Well, look, come on, Mr. Fundamentalist or Mrs. Fundamentalist, or all you fundamentalists out there. Look at this. The entire market is, and I mentioned this over a year and a half ago, and I'll reiterate it again since it's earnings season, is underperforming, and most of them, if not all of them, are below their pre-pandemic levels. Why is the standard being doubled here? Why is the standard and the expectations are extremely Superman-like for AMC and GME versus very minuscule for these stocks, or the biggest stocks in the world or globally? It shows you the bigotry and the hypocrisy that we live in, and the fact that the FUD is obviously always coming from these individuals or these entities that mean to do us harm. But unfortunately, it gets on steroid. It gets pushed even further when some of our supposed people that unfortunately the community have put at pedestals, and now these people are, in the same time, their interests are not mainly on the play. They love the play. However, their interests are on their channels, on their content and all that stuff. So therefore they're interested about what's the next thing I can push out to people that gets me more views. I need to push out the thing that makes it breaking news, hype people up and all that stuff, but not truly give out the true message. You know what that sounds like to me? Media. The regular, normal media as we freaking fucking know it. Sorry for the F bomb, but that's what most of our Kool-Aid drinking community, certain creators have gotten into. They drank that Kool-Aid and now they're coming back acting as venture capitalists and gurus, and they're pushing that down to their content viewers, and those viewers are saying, you know what, he does make sense. Yeah, we are like fundamentally we're not doing that great. We're going to go bankrupt and all that. Well, guess what? Bank of America should have been bankrupt. Morgan Stanley should have been bankrupt already. We're actually performing better than 90% of the other companies. And I know many of you are going to be like, oh my God, look, we have 4.5 billion in debt on our balance sheets. Well, guess what? While these people don't show debts on their balance sheets, it's because they're constantly bailed out of it. The balance sheet don't exist. It's always cleared out and balanced out. If these people were to own up like AMC was supposed to own up to his balance sheet, Bank of America would have long time ago been in trillions and trillions of dollars in under the ground. They will never be able to pay that off. So again, the standards are set to us at the highest of levels, even astronomical levels, and we're supposed to be measured against it, versus the entirety of the rest of the market globally is measured with a completely different measures and standards. It's complete dog shit, and this is why people are having these second thoughts and talking about we're going to go through this and we could get shut down because we can't pay the debt and all this stuff. Again, all these entities I'm naming to you, wait till we get to Charles Schwab. We still didn't even get there. All these entities that I'm mentioning to you, including Carvana, that is ripping today out of the world, are all stocks or companies that are highly performing under their market expectations / below pre-pandemic levels. So why are they not dumping? Why are the fears not dumping on them? Again, I gave you the answer if you've been here throughout the stream earlier. The reason why they're not dumping is because the analysts are actually the grading analysts are giving measures to constricting measures to go ahead and inflate their expectations at least by 40%, depending on what the report is. So if this person did 60% on his exam, give him 100%. Literally, this is literally what we're dealing with here. In what world does that make sense? In our financial world. AMC could do 90% on its report card, give it 55%, or give it 55, fail it, give it an F. That's the system that we're working with. This is why I'm always talking about, and some other brothers and sisters who are preaching on the rightful word of justice. This is why I'm constantly, and they're always constantly speaking about the certain few are saying, we are not just fighting AMC's board. We are not fighting the CEO only. We're not fighting this. We are fighting the entire stock market as that's our true enemy, is the entirety of the system. That's why I'm always saying we're all alone in this against the entire system. We are supposed to dress with something that we don't want, and the market is dressing everything else with whatever it wants. But this certain clothing is tailored just for us, and we got to go with it. What's up? I'm feeding Kenny's pool. Okay, so let's jump up from here to Charles Schwab real quick. Okay, listen to this. You guys need some laughing. Oh, good one, Christopher Santos. Indeed, we have God. We just got to make sure that we believe in God, right? Because we got a lot of people in the community that are flipping over to the agenda that is being fed to them fundamentally. Come on, where is my report on Goldman? Sorry, on Charles Schwab. All right, let's get our laughing on people. So Charles Schwab reported quarterly adjusted earnings of 75 cents per share for the quarter ended in June. Now that sounds great. Now let's hear the laugh part. The mean expectation of 18 analysts for the quarter was for earnings of 71 cents per share. So the expectation was that it's supposed to have only 71 cents per share. And instead it did, since it did 75 cents, everybody was like, oh my God, that's the most bullish news ever. Let's all jump into Charles Schwab. Based on what? Revenue have fell 8.6% to 4.66 billion from a year ago. Analysts expected 4.61 billion. So again, here's the bigotry. Listen to this and probably laugh at this. So, and I'm going to compare it with AMC right here. AMC does better than last year. We've been doing for like almost what, like 6 or 8 straight earnings where we're doing better and better and better, even though we're still operating at a loss, but we're doing better and better, right? Now, the year that is supposed to be the worst year in recent memory for the market and abroad was last year. This year is supposed to be considered the bull year. And in the bull year, Charles Schwab revenue fell 9%. So I don't know how that makes sense. That's good news. But again, this is when you're told to elevate your expectations so that if the parameters are here, raise it to here so that when the results come up here, now you'll be like, okay, or let me make it even better. If the parameters are right here and you turn it down here, the expectations, and the results come here, you're like, okay, it's good. It's better than expected. So therefore, that's a bull situation where for us, look at AMC. The parameters are right here. We come right here. Oh, that means bad. It's not good. That's how that obviously makes no sense, and it's all bigotry. Charles Schwab Corp reported EPS for the quarter was 64 cents. The mean earnings estimate of the analysts had fallen by about 9% in the last 3 months. So again, supposed to be bullish news. In the last 30 days, 12 analysts revised earnings estimates just in the last 30 days. Charles Schwab, so 30 days ago, technically, put it this way, somebody's received the memo in some sort of, you guys remember the extent pigeons that back in the days they used to use as message or mail senders? They would tie these letters to these pigeons' feet, and then they will send it straight to this other person that they're sending the letter to, and the pigeon will fly straight to that other person, and they will receive the message. That was MI6 or the CIA back in those days. That's how they operated. But so this is the same case. 30 days ago, analysts received a memo, a pigeon with a letter saying that, hey, you need to revise your expectations here massively so that we could have this results that we're living in today. The current average analyst rating on the shares is buy. And the breakdown of the shares is buy, strong buy, and hold and sell. And again, these are all people that just say whatever I never even look at. This summary was a machine, blah, 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 blah. But yes, so that to you, ladies and gentlemen, is another example of how BS is considered good. Let's look at Morgan Stanley. Let's look at Morgan Stanley. Where are your reports, Morgan Stanley? I don't know where my report went on Morgan Stanley. Morgan Stanley also is extremely getting hammered by the fact that one thing for sure now, and since last year leading into this year, the amount of SPACs, which is something that banks live for, especially Morgan Stanley. And you're probably asking, if you go back to last year's summer, we broke a live about explaining what SPACs are and all what this is about SPACs, and you will probably see it labeled as Morgan Stanley and SPACs. I still remember that live and that video. But they make a lot of money off of going to these companies that wants to go public, and they make so much money in these acquisitions and in these fundings. And there has been a major derailment throughout last year. It's running into this year as well, into where there's much less SPACs, which arguably so makes sense to why there is much less, companies trying to go public or merging or any of that sense, because look at the market conditions. You can't look. Okay, one thing about money is when it comes to rating, it's easy when it's just rating somebody else's money. But when it comes to working with your money, no analyst can rate that as that's not too good, that's not too bad. It's your own money. You can't rate it. At that point, it is what it is. So what you got is what you got, which is the real metric and how everything should be measured against or by. Let's see here. What have we gotten? The SPY, where it's at. So it filled this gap. It didn't fill that gap. I don't know. I think I seen a comment that said fill the gap. It didn't fill it. So it filled it. Maybe if you see it right here, but it needs to fill completely here. However, it made a lower high right there, which indicates until now, until we see further indication, if this next movement or wave will close down here, and that will indicate a lower low, which again will indicate that overall it's in a lower trend. As you can see now, look at that, the volume and the craziness that inflated the market this morning, just an hour and a half ago, is nowhere to be seen right now. Right now it's all consolidation, waiting for more volume to come right back into the markets. Let's look at Carvana real quick. Carvana is still moving up. Volume did indeed a little bit dry up a little bit, just a little bit, because it was a 66 or 62 million just about, what, 40 minutes ago, and now it's at 71. It was moving at a much higher pace, as you can see that here. This was a huge pump right there at 1043, and I think it was the last one before the massive consolidation. It's getting ready for another move. We'll see you to where. Again, at this range, this is just ludicrous. The fact that this company is losing its ass off, it's operating at a loss, and all whatever you want to call it, it's all happening with this company in a bad sense. And yet this stock has squeezed over 800%, versus AMC has much better, at least outlook as far as performing better since pre-pandemic levels compared to pre-pandemic levels at its own thing. You can't compare a company with a bank. You can't compare a bank with a supermarket. You can't. Each person or each entity is in its rightful zone, and it's compared. It should be compared against its rightful level or its particular habitat. So you can't take. I can't believe that I'm making this example, but you can't take a frog and put him next to a lion and start comparing the like the raw power between the two. It's just not the same parameters here. You take a frog and you put another frog species. You take a lion, you put another feline species next to it, and you compare maybe with the jaguar or the tiger. And that's, you guys get the memo of what I'm trying to get to. Here, they take AMC and whatever it is that what you want to refer to AMC as, and then they refer to freaking Tesla's expectations, or they refer to Amazon's expectations. And we're not in the e-commerce business. We are not trying to reach into every household. We are a streaming company for movies, and we in the show business. That's how we should be measured against. If you measure us against Senmark, against the other people in our habitat, you'll see that why we are the apex of our habitat. Yet we are not compared exactly to that. Belligerent Ideas got their order filled for Tesla. Let's see. Brocape, thoughts on IXIC? I will look into that in just one moment. Let me see if I missed anything. Let me glance over. Alice, sorry, I'm just now seeing this. Good morning to you. David Stevens, good morning, sir. Nice to have you guys here. And Mr. McCohen, GNPX. We'll definitely look at that right now. So, okay, GNPX. Sorry, Brocape, but that question came right before it. We'll look at the other one right after. Okay. Volume is nowhere to be seen, first of all. It is much higher. It's double the volume on just the first 2 hours of the day, hour and a half, than the 3-month average. I don't like low moving volume stocks. That's just personal preference, but again, that shouldn't matter to you, Mr. McCohen. The float is over 44 million. It's also another flag for me. I always like, if I'm going for a stock to like day trade or like pump, or who knows, dump, I like to see at the very max, a float of 20 mil. That's just my thing, because at 44, it's above my likable average, like area, over double. It's a little too much float, so there isn't much that I can see there. Let me see, because of the volume. It looks like on the day it did, as you can see, dip right here and made a death cross, but that's just on a daily, so that's just for short term. And it explains why it's down 15%. You can see that broad drop right there at 9:35 as soon as the market opened. However, this stock right now is going through divergences. It did make a higher high than the last pump of June, June 30th. I think it started at June 30th. It topped off at July 3rd, and then July 5th after the 4th. Then it reconsolidated, and then now it pumped out of control, of course, to $1.05. The previous high was around 96, 98 cents. So what this looks like to me is, if we follow this trend right there, is you can see all these divergences. These are very sticky business, as you can see here. Breaking up above the 200-day moving average and then breaking right back down through it. But it's taking this zone right there. So here's what personally I do in this case, in this stock. I would look right here at 75 cents is looking like the zone where this stock this is the demand zone. Yep, as you can see in recent memory, that's where it's been pumping off of. So I would wait for this stock, for me. Again, not giving advice, this is just for me. Talking about my thoughts. I will wait for this stock to hover around 76, 75 cents. At that point, it's a buy for me. If I want to get into this play, it's a buy for me at that range. In fact, it also looks like that way because as you can see here, it's finishing off the wave that it ran out away from. On the 14th, it started and it ended, it looks like today. So 4-day run from last week to this week. Right now, anybody that's getting in, my rough estimates shows that they will be coming in to catch a knife that eventually will come down to perhaps anywhere between these ranges. So if I want to catch this play, I need to be very, very right there. So as soon as this stock for me rebounds to 80 cents, which I have almost no doubt that it will do that, almost do that. So as soon as it touches 80 cents, I'll be looking to see if it bounces right off of it. If it does, that's interesting. If it doesn't, and it continues to fall, I would definitely look for 75 cents to start loading up my position on there. And at that point, I'll be going in long. The last time it did this, what it did was in the beginning of July, and then 20 days later, it made another run. So I would have expectations to go long on this play after 75 cents at the 75-cent range. That's the best price point. If as we can see, is it always touched it every time it went up and came back down. It always touched this area, the 75 and 72 cent range. Again, between those 3 pennies, time in the bottom would never be a successful strategy, or time in the top, as I always say, is always going to be a loser strategy. But looking at a zone is always the most successful way. So 75 cent and below is a steal. If I was to look at the stock and evaluate it in AB's evaluations, 75 cent and below is the best price. Like, it's a steal. It's like you're getting, 6 for 1. Like if you go to Walmart and or Kroger's or whichever retailer you have around you, and they say that trying to buy Coke and Pepsi, and you see that Pepsi is like 4 packs of 6 bottles each are for $5. You'd be like, that's a steal, because then normally each bottle sells for over $1.50 or $2. So that's equivalent to that. So the 75 cent range is equivalent to my buying range as a steal. 80 cent is not bad. If I'm bullish of the stock based on whatever news that I'm hearing, because again, that plays another part. If I'm bullish on the news, then I need to, probably perhaps not emotionally be driven, but at least initiate a small order at 80 cents to make sure I'm in case it bounces off. I do not miss out on anything. I have my position in there. I'm exposed to the rewards of the position. And the same time, the 75 cent, if it drops to it, that's a better averaging down opportunity. So it depends on how conservative of an investor I am, or the individual are. So again, 75 cent range is between 75 and 80 cent is a steal. Anything around the dollar, of course, is a sell. And to be more precise here about this, again, it depends on the news and your expectations on it. But if I get into something at 75 cent and it goes up to $1, that's a 25% profit. That's extremely amazing. You're talking about many entities out there operate for, and they look for the 3% and 4% and the 5% if it gets good, or even 10% at its finest. But hopefully, all this explanation makes any sense, Mr. McCohen, on GMPX. Now we got another one here somewhere. Let me see. Which one was it? IXIC. So looking on the NASDAQ, it looks like similar to the S&P 500 for now. In fact, it's been doing the best, even better than the S&P 500. Today made a new 52-week high, understandably so. The S&P 500 is just lagging behind NASDAQ, in my opinion, on that. This conversion happened back in March of 2022, of 2023 of this year. As you can see, look at this. This is a classic fundamental that I always try to teach you guys. It makes the golden cross. The convergence happened. The divergence happened between the moving averages of the 50 breaking the 200 to the upside. Next thing you know, it goes up. I'm not emotional. I'm not getting in because it just did that. It did a retest. This is what AB would always be telling you guys and see, to be coming in at a much more confident and sturdy footstep. Coming in after this, it retests right there as it consolidated up here on the uprise, and then it came back down. I need to see the pull. Were they gonna go ahead and converge again, and the 50 goes back down under the 200, similar to the GMPX chart that we saw a little bit ago, where too many divergences were happening. Instead, here it's pretty clear. It retests and then pushes back up and made another high. So at this point right there, at 11,879, for example, that's the range I would have opened up any upside calls. But of course, it would have to be for long term, and that's what smart money always does with these, because you can't just play a weekly. While you could still would have made money, but again, when it involves an options chain and Greeks, you would have to play. I mean, again, this is just not financial advice. This is just what I do. I will go long. I will go further out, months down the line, at the very minimum. And yes, if you would have gotten in then at that range, at the 11.8, it's right now at 14.28. You would have made an amazing amount of obviously money on this, in the NASDAQ. Of course, the stocks that are exposed to the NASDAQ. Look at that. And it has no no sign showing of slowing down. It's continuously making these higher highs, upward trend. The algorithms are keeping it up till we see this converge right back down or diverge back down below the 200. It is still considered a bullish stock and an upward moving stock. Let's look at SPY. Haha. It looked like it filled that, as you guys can see here. Higher lows, higher highs. This shows that this thing is going to come back to try to retest this, and throughout the day, this high right there, eventually you're going to see what could be just like yesterday's retest. That's why I was telling you right here, would be a perfect entry, as if it rebounded right there when it came down. It did not come below this. At that point, this is what I was always telling you guys. This was a great entry for this. Believe it or not, 455.18 to this point right here, and 456.04 or even 455.87 would yield you very good amounts of profits, at least a 20-25% profit range, if not much more, like at least 30-40% in an options chain on the SPY like this, on a movement like this, in such a short amount of time too. You're talking about from 11 to 11:42, so in 45 minutes. If you hypothetically put in whatever, $2,000 on the SPY, obviously in the right direction to the upside, then you would have yielded somewhere around $400 to $500 out of it, and you can take that out and be happy. In just 45 minutes, you would have been rewarded for your time. Do you value your time as 45 minutes is equivalent to $400 or $500? If it is, hey, and you have $2,000, kudos to you. If not, then you will hold for more, the more upside. At the end of the day, it's all about making money. This looks, if this thing does not close under this, it's still poised to go ahead and make another high, which many other traders I know right here would go ahead and hold through this, especially if they're playing the daily expiration. They would collect their profits and leave the rest. Since they got their initial investment back out, they will leave the remaining for where the next resistance level is going to be, which is the 456.34, the high, not too far away from here. You're talking about roughly around 54 cents away from where we are right now. So they could definitely hold for that and be more greedy, or they could be happy with their profits and take it out. Let's see. GMPX down 19%. I got out yesterday. Okay. It was a Charlie pump. Who's Charlie? More for my grandkids to inherit. Ryan, did Antera sell out all their ape shares? Hold on. Ryan, where is that news? As we've been looking at this stuff here, I haven't paid attention. Let me look at Ape. Ape is up, so I don't know. They sold all. If Antera sold all their Ape shares, then this should not be the case here. At what, up 2% or 3% on the day. Being that massively the biggest investor in Ape, they would put a big dent in the price of Ape if they were to sell their entire position. But where's the news coming from? Maybe perhaps you can point me in the right direction, brother, or the rumor. Broke Ape is probably very excited. You got your orders in for Tesla, because when I just saw that post, then you definitely have gotten probably somewhere down here, because that's when we were talking about it. Let's see what happens. This is a very crucial point right here, Broke Ape. It's retesting that support level. This is a very, very, very good area to see if it breaks through it. I doubt it. It doesn't look like it right here. It looks like it's choosing this zone, this 297 zone, as new support now. So you can see in the open, it closed at 293. It opened at 296, and it has not gotten since the 294.23 on the low of the day right here, which was at the very open. Since then, it has not seen anything like that. It's been higher highs, higher lows, maybe some divergences here in between these waves, some choppy action like a higher high, higher high, then a lower high, but still a higher low, which again indicates a bullish, and it's a very bullish indication, especially with this. That means it's extreme volatility in the stock. And looking at the volume, it is mighty high, but it's still waiting for that moment to break out. I think there's going to be some sort of breakout coming in at some point. So let's see if this level is respected as the new buy zone. If this level is respected, then you could safely, and this is again not advice, this is just my articulation on the market, then it's safe to say that this will be the new norm, that the market is suggesting that Tesla is a great buy at 297 and 297 and 50 cents, 55 cents. So that's where the market sees perhaps Tesla being it, and then a rebound from here to the upside would look extremely amazing for a lot of people, especially for Broke Ape, if he's, like he says, in the play right now. Let's see if it respects that or breaks underneath it. I wouldn't overreact until I see here there was liquidity grabs that went all the way down to the 297 even. So is 297 the price that the market is setting for Tesla going into the end, the rest of the day, or not? That will be seen right here. Let's see. We'll fact check our AB in this moment. EMC is up for 0.5%. GME is up 0.17%. Workhorse. You guys remember me talking about this yesterday. This is one of the stocks that I'm in, and I love. Believe it or not, this stock is in Ohio. This is actually in Cincinnati. the Up in almost in Dayton, the headquarters. I could literally go up there and see what's up with them. This stock was one of the meme stocks that squoze out of proportions back in 2021. I believe it was around the $60 or the $48 range, if my memory doesn't fail me. Look where has it fallen from. It was involved in so many rumors in the past with them creating a truck for Walmart, because they were, it was so funny. Some people, some investors were in this meme stock were sending drones over their headquarters to see, and they saw a blue truck, and they were like, maybe that's the beta version of the truck that they're building. Maybe they're in talks with Walmart, because Walmart is getting into the prime business like Amazon Prime and e-commerce, and they're trying to be delivering their products and stuff like that. So they need a lot of vehicles. So a lot of people took that, whoever sent that drone over the whatever the headquarters. I still remember this like it was yesterday. And they saw that it was being painted as blue and there was some yellow on it. They were like, that's equivalent to Walmart's logo colors. Maybe they're making a truck for Walmart. And then it was crazy how they all, like, started hyping each other up about it. But the fact that it's up 19% here is interesting. It's above its a moving average on a daily already, and it's less than 2 hours in the trading session. I like this. And that's evident right there. Ah, see, Workhorse is doing a GMPX for now. It almost broke the 200-day moving average right there, but then it was heavily brought right back down. It did break it here, but when it came down to retest, as I always tell you guys to watch out for, it broke under and it made this divergence, and now it's breaking up through it again as of the 11th of this month, which again is exactly last week. This is interesting. I will be waiting now to see the pullback and see where it goes if another divergence happens. It's that's going to be a very interesting moment, because here the previous rip happened on the 15th of June and it converged again on the 30th. So in 15 days, so in about 2 weeks cycle, we had here happen 1 week. So by the end of this next week, or if not by midway next week, we should be able to see where this thing would be gone, or at least estimate where this thing would go. If it would have continuously keep going up, that means it would be short squeezing out of proportions. If it retests, and that's what I'll be looking for, where will it retest a week from today? Will it go right before, back down before it? Now, at the end of the day, it's not about just catching it at the lowest price possible. If something is squeezing, it's about getting in at a sure moment, or the best, most sure or accurate moment. That's what success equates to, ultimately, in my humble opinion. Taking back a quick glance at Tesla. It's far extended below the 50-day. It's within that range. As I told you, broke ape 297 even is where you would be looking to see if a break happens to the downside. Look at that. So far, it's respecting it. Right on the line. You guys witnessed, if you're in this stream, as I said, fact check AB. This line was drawn. It was not given by the chart. We put that there. I just got smacked by the coffee in the nose. Saying stop making your head bigger and bigger. Belligerent ideas. I grabbed those contracts, AB. Thanks. All mine. Hell yeah. Hold on, am I confusing? Was it Broke Ape or Belligerent Ideas who's getting into Tesla? Oh, it's Belligerent Ideas. Sorry for you both are my, some of my favorite people. And then I confused because I see you guys are very active in the chat always. Thank you, AB. I'll be getting out of my QQQ next time I'm in profits. It's taken too long today. Oh, wow. All right. Well, good luck with that one. Brian Wallace, do you think AMC is manipulated? That's a joke, of course it is. You definitely got my laugh for the day, Brian. Thank you for that one. Probably explains why Ape is up and Antera is finished selling. If Antera finished selling. I just can't see that, my friend. If they sold their entire position, you would not be seeing any up action in Ape. Finished or no, like if finished, you will not be seeing this. Nothing will equate to green for Ape. If Antera finishes selling or everything. If they sell moderately, you'll see ups and downs, slowly small amounts, because they want the price to obviously, again, for whatever plans they have in store, whoever they're colluding with, who God knows. They want to slowly do this so they can maintain the price of this security right here. However, if you hear the word finished, you will see Ape in the cents, not in the dollars. Take a quick glance at Carvana. Carvana is making its trend now of the lower highs and lower lows. Is it over at 56.87 for the day? So for Carvana, before anybody starts talking about, oh, going into short, like, buying puts on Carvana and all that stuff, $50.41 is where I would start looking. Again, where I would start looking, and then seeing the previous liquidity grabs right there. Since there's a massive gap here, there's a complete weirdness. Breaking this level is when I would look, confirming that it doesn't return and break right back above it, right here somewhere at 49.48. That's when I will be a lot more comfortable buying puts. Again, 49.48 is if it rebounds, touches that $50.41 and does not break right back above it, because this is clearly what happened here. It had a quick liquidity grab, taking out stop loss orders right here, which a lot of people I know are angry about. Whoever you are out there, I'm sorry. These moments will define you as a trader. Hopefully you're watching AB Investments right now, and this will explain to you what happened with you. But this was nothing but these two big wicks right here were liquidity grabs. They came in, they took out all these stop losses all the way from 50 to 47.07 in such a quick glance. And then the price surged back up to this area. So if you had calls and you had the stop loss over here, or you bought shares and you had the stop loss at 47, thinking that, hey, I'm going to be very safe. It's halfway. Well, you were not as safe, because you can't put a stop loss at this, even if you saw the bottom of this candle right there, because there's what precedes this is a huge gap right there. So it could be anywhere. So this liquidity grab now at this point of time in the day, 2 hours in the day, now we know where the liquidity grabs have been going to. So once it hits this again, if it hits it again at 50, I need to watch. If it rebounds, then I will be more interested in buying calls. So the people who bought puts right here, they with the indication that it's going to drop down or even fill this gap or anything, right now they'll be in the red, and now they're held. And especially if it's a weekly and it's due this Friday, they will be, their premiums are getting massively slaughtered just within the first 5-10 minutes. They could get lucky, and this thing could end up doing what is supposed, what it looks like it could do, but also it could look like what I just explained. It could touch this and bounce back up, or even never touch it and rebound, and obviously buying pressure comes in and it goes right back up and continue to consolidate in this zone. And that's what kills options the most, is to have an out of the money option, or even in the money. However, if it consolidates in the same range, let's say it forgets about all this volatility, and from now until Friday, it just hovers between 52 and 56, 52 and 56, you will be, if you got in when it was at that in that red candle right here, and you bought puts and you bought it at the 51.92 or $52, now you're like, okay, please go down to $50, please go down to 49 or $48. Otherwise it's not. And every hour goes by, your extrinsic value is getting chopped. So your break even is going to be lower normally than what price point you buy at. That's how it works, because it's your buying price minus the premium that you paid. That's what your break even point is. Hopefully that explained a lot to any of you in the family here. Much love. Belligerent ideas is okay. My wife's boyfriend calls me broke ape too. A true legend right there. Brings back the Reddit days and moments. All right. Let's look. Apple has been a ghost town today, so forget Apple anyways. Everybody loves Android. Oh man. Man, the band on this SQQQ keeps getting tighter and tighter. This thing is gonna spring so freaking wild. Just wait. Because the moment this elevated market, um, inflated market drops, it's going to be very massively quick and fast, and that would be exactly the opposition of this, because this is the on the opposite side of the slingshot. Excuse me, and as you can see here on the day, no, sorry, not on the day, on the weekly. This is where you can see a perfect head and shoulders form in here. This is the shoulder, the head, and there's the shoulder, and then obviously that equates that structure equates to downtrend. And of course, look at it. After this was confirmed right here, this high was not higher than this high. It ended right here. It gave you the head, the shoulders, and let me do it. And let me see if my drawing skills are good. Let's see. All right. Terrible, too big, but not that bad. You see, shoulder number one, the head, shoulder number two equals bearish action. Did we get bearish action? We did. And now we are where we are. Stop drawing. All right. Stop drawing. I need to press escape right there. All right. So yes, we are here now. Man, this thing is gonna. You guys have no idea how bad this thing is gonna spring up. In my humble opinion. All right. Belligerent ideas. That's funny right there. I don't care who you are laughing my ass off. Who erased my comment? I don't see anything being erased. Did anybody? I don't even see any mods in here. Pabloco was the last recent one in here. I don't know if but that was a while ago. Pabloco's probably not here anymore. So I don't know who did. If there was a comment erased. Pabloco is still here. Yeah. What did you put? Type it again. I peed in Kenny's pool. If you don't mind. Watch, somebody deletes mine too now. Sounds good, brother. Sounds good. 1 moment. I just gotta switch up from my. I got my uh, business's Facebook on right now. I received the message, but I got my business on. I gotta switch it away from my business to my personal portfolio. Answering questions to some customers. What are your hours? Ah, okay. All right. SPCE got some positions in that in that stock, my friend. They got a. I know I'm waiting to see because they have this big second commercial flight due this August. Again, they're also one of the stocks that um, like one of the meme stocks and heavily manipulated stocks slash everything you might think of. As you can see here, it's doing a lot of divergences. It's doing the same thing GNPX E, or the one that we were looking at earlier, the GNPX stock. Um, Breaking right through it. The good thing about SPCE is boom, $3.10 looks to be the grab zone, the steal zone. Of course, if you evaluate the company at $1 higher than that per share, I can't be wrong. I mean, you can't be wrong with that. I can't be wrong at any differences with you on that. However, uh, it's important to see if this bottomed right there. It is making weird, like higher highs and now lower highs, but it's keeping the weird lower lows. It's basically in this weird trend where it's not just a consistent higher highs, which indicates to high volatility. And obviously, this chart right there shows me manipulation at its finest, where something or some things are manipulating the price of this stock. But the best part about it is that the peaks seem to be different every time this thing pumped on a greater time scale, on a longer time frame, like on a monthly time frame. This thing pumped higher. Right now is at that $4 range. Again, if you evaluate this, in my humble opinion, I looked at this as a grab and a steal at the $3 range. I still see it as a steal. in this range. Anytime it goes up into, I would say, like the $4.50 range, I think that that's when it gets a little bit too expensive. Again, that's not about, like, it could squeeze up to, crazy ludicrous prices. However, looking at this right now, because in this range that it's in, this stock right there this is the way I see my averages. That's the way I go about my thing, because I don't like to see any red in my portfolio. Rarely any. If I ever see any, I want it to be very minimal, so that I could have my stop loss set at below or up to 20%. That way I know that I would not have to get out of my position. If I look at my technicals correctly and calculate correctly, then I would go right up. So yeah, the grab is around anywhere between 3 and 4. The steel is at 3. My top would probably be around the 4.5, and that's like on the more expensive side. 2nd. As you can see here, also with the price action, it's a little bit above. Even the Bollinger Bands here agree with AB. We didn't even have those turned on till now. Right now it's in the middle range. Anywhere around the 450 would be on a monthly time frame, on the higher range of the band. But again, all these could get extended. I don't see any crazy move happening yet. In fact, I think that news about the second flight could mean or break nothing. I think that ultimately this stock is tied up with the rest of the meme stocks. I'm in it to win it. I don't care about what they say about the stock. It is a lot more successful than Jeff Bezos' exploding rockets, and I think it's the only thing that could probably even compete with SpaceX. So even grabbing any market share from SpaceX, which apparently rumored to be even evaluated at higher than Tesla, which is crazy, would mean a lot for this $4 stock. You see what I'm saying? So that remains to be seen. This is a stock that I'm long on. I have no time frames, as in I don't care how long it would take. I believe in this company. And yes, it is getting hurt, but every company in this universe right now is hurting financially. This has a lot of investor backing, and that's all I care about. And I got myself in places where I know that if it dips below this, below the steel zone, then guess what? It's only below like $3. Hey, more gobbling for me to do. Again, not financial advice. This is just my opinion on it, since I have a position in this play. And then BHG. Oh, whoa, what are we drawing here? Press this. I didn't press this feature. The drawing feature is back at it again. All right. BHG. An interesting point, inflicting point right here with BHG. So seeing this, I would need to see BHG come back right down to me take these. They're so annoying. That makes everything harder to see. Okay. So I would need to see BHG touch 1030 again, retest it as you can see here, took off, retested the 1030 range, went off again, and I would like to see it touch again. If it doesn't, great news. If this wave, next wave ends up right here somewhere, then that would be amazing. That will indicate to me that it respected the convergence. As you can see here, it did a divergence with the 50-day and the 200-day moving average. It touched it right there like last week, and it bounced off of it. It didn't break below it. So right now, I would be looking for the 1030 yet again to be touched again, if not just a little bit above that. And then if it does overreact, I will be watching for the supply zone. For me is at 898 is where, like, I would say if it breaks underneath this, that's the second level I'll be watching to start entering the play. Personally, for me, if I was getting in, and then I'll probably be going long from this point on out. But it's important for me to see this level being respected, the 1030. It's very important to see it not go below it, because going below it, while that becomes in the steal zone to buy, it also indicates that this thing is not necessarily close to squeezing yet. Again, if I'm looking at my expectations are for a squeeze, I want this level right here to be respected. And I would like to see a rebound after it touches this. And that rebound should be, hopefully the next wave will be above the $13 range, perhaps somewhere around this area. Let's bring AB's drawing tool again. This area. Anything above here or higher. Anything above this point or higher. So let's see how that plays out, my friend. Hopefully that answers the question. BHG already did a reverse split. Okay, great. A couple of months ago. So at least the worst of the worst might be behind. That's why now we need to see that retest and go down there. As this pains me to say the following. This is, ladies and gentlemen, what you will perhaps look for in AMC reverse split scenario. Stuff like this. Remember this right here? Look at this. This looks like an AMC chart almost. The stock back in May 10th, had this high right there. 1 second. Let me go back into a year. Look at that. Not saying that this is exactly the same company or we do the same thing or any of that, but these companies all go through these reverse splits, and eventually this is what happens. You will get shorts to cover their positions. That's why they shorted these companies from the get-go, which results in a little uprise in the stock. And then eventually the stock goes right back down because of the buying pressure of buying back and closing short positions. Eventually you'll see that wick up to the top, which happened right here. And then you'll see it go right back down. And eventually, if more shorts didn't close or they shorted it again from this high right here, then you'll see another move to the top, but it won't be something that goes above the 30s or the 40s or something. This thing could break up to maybe perhaps another $20 or $18 and then get shorted again. That's just the vicious cycle that shorts get engaged in. Alice, AB, didn't you just say 20 minutes ago you thought Apple could or would go up? It just jumped $4.36. Wow. What happened with Apple? Been lagging. I don't remember me saying that. It was like it's a ghost town, but not so much. after all. Look at that. Wow. And it's coming back down. Holy smokes. Based on what? What did they report? Apple races to develop their own generative AI tool to catch OpenAI. Let's pump. You're welcome, Frankie. Wow. Let's see. Let's look at Tesla. Aha, you see that right there? It broke underneath it. Now it has an actual full chance to fill this gap right there at 293.59. We'll see this one is at 294.91 right now. There must be some terrible outlook coming in. European stock gain ahead. Flat US open market talk, blah, blah, blah. What came in? Let me look. Tesla, what are you doing? This is just liquidity grab, maybe perhaps filling up a gap before a crazy tomorrow. Let me look right here real quick. Also, let me see what the institutes are doing. Oh my God. Holy smokes. It's interesting with the case of Tesla because the big boys right now, as I look at this stuff, like the options chain, um, the big boys are conflicted between, above 300 and 310, and of course about 275, which means they probably want it somewhere in between. Um, But from this point right here, anywhere above 300 is going to be extremely big. This could, again, easily be a massive liquidity grab. More heavy action on Apple. Meta. Oh my. Damn. What do you see that we don't? What do you know that we don't? Netflix? This individual probably thinks they're very slick. They wow. They're leveraging their positions. They're playing the $460 strike price, even though that the price of Netflix is currently around what? Where are you, Netflix? 473. Oh, yeah. This is a Nancy Pelosi that I just viewed. This is a Nancy Pelosi like individual. They got literally about $1.5 million worth invested, half divided equally in 750,000 each on calls and on puts, both at the $460 strike price. The reason why that is for the puts, 460 is a long way out, especially expiring by Friday. It's a long way out from there, but when it was purchased at 477, now at 473, moving with this, look at this. With this volatility, and here's the funny thing. It's not so funny, but unfortunately it is what it is, right? It was purchased at 1155, which is right here somewhere. And as you can see, the price instantly does this. Now those puts could easily, this individual, this Nancy like Pelosi individual, maybe it is actually Nancy Pelosi, is already in the profit on their puts because it's down $4 on that volatile move to the downside, and they could get out of it because the price could really never touch $460 on Friday. It could if they know more than we do here, but instantly right now they are massively in the profit. They don't need to wait until the time decay kills their options, and what they could do is sell their puts for profit, and they could ride out the calls to make even more profit because the calls are also at the 460 strike price, which means while they're taking some red here, they will gain that back up as Netflix goes above, because the price again is the strike price is 460 and the break even will be somewhere around the 477 478 range. So again, Pelosi like investor. Yes, it is. They hurt you. Belligerent ideas. Okay. The Yin Shin. How are you, my friend? Can you read current chart and explain to us pattern and your TA on what exactly? AMC Golden Cross on the 2 or 4 hour. Okay, perhaps maybe on AMC. Let's see. No, there's no golden cross on the 2 hour. This is more like a death cross so far, Yi Chen. And same thing on the 4 hour chart. It's also like there's a lot of convergence. As you see, we barely peaked above it here on May 10th, and it was right away within that month. We broke right underneath it. When I always speak about breaking above, retesting, and breaking out of course, we broke above it, barely peaked above it, retested, but instead of breaking out of, we broke down underneath it. You clearly see that on the 4 hour chart here. And now we're consolidating for the up move again. On AMC, I hate having to do things like this because that gets the day trader mindset out of those day traders out there. So with all love, I don't do any day trading on AMC, but I will break down the charts because it is another stock. Again, if there's a day trader out there at AMC, the golden price here shows to be anywhere between $4, where the range that we're in right now, $4, 20, 30 cents, all the way down to 375. That 70-cent range is a steal price considered for AMC. And eventually, right now, what we're seeing is that the bands are tightening up. And as you can see here, Yi-Chin, I like to look at the monthly a lot more, especially on stocks that I'm really long on, because the movement on it is going to be a lot more sustainable and much more bullish or bearish, whatever the case may be. So if it's underneath the 200-day moving average, as you can see here on the monthly time frame, which is also considered by the hourly, you will see that it is clearly still under that $200, not $200, 200 day moving average. We barely did some convergences, and you see here we had some small golden crosses, like one here on April 13th at 498. It broke out to 611 because I believe at that time that's when they said something about along the lines of the lawsuit is like Ape is canceled and is going to move forward to the court or something like that. And I remember something like that happened. So that's why Ape went back down, AMC went up, and then it went back down again. The convergence, if you can notice, the news actually plays into the price of the stock that makes the TA react right to that. And then you see here, we broke right underneath. And since then, we have not gotten back above. There is a little tilt up here, as we can see, and now we're consolidating. Something is coming up, and it's looking to me at the end of the day, as you can see here, if we open this up, it shows we have like the high right there, then the lower high, then another lower high. So it looks more into, while it's looking like it's consolidating to the downside, all it can take is, since we're this close, is an uptick in price based on whatever news that comes up that moves us up, like whatever, 10, 15%. And next thing you know, 5, 10, 15%. And now we get this next divergence. And then next thing you know, we will be, on the opposite end. And that's when you call a golden cross. Now, personally, for me, I like the longer time frames. You see in the 4-hour here on a monthly frame. Also, it's good. That's why you can see here the death cross happening back in August/September of 2022. Since then, we were never able to fully break, because as you can see here, we broke it again in May, but we retested in the end of May, and we couldn't break out of it. We broke right underneath it, so no support there, and we see the case being here as well. So hopefully the next one can break, perhaps retest on. Hopefully it doesn't even retest at all. It just squeezes. But if it does retest, hopefully retest the 200-day moving average and break right back up to the upside, forming another higher high. At that point, it's a sure moment. Again, this is for people who are looking at AMC as a day trade, and again, that's not for me. I'm looking for, I'm not looking, for example, for AMC at $6 or whatever. I know there's a lot of people in the movement, and I'm not saying you are one, Yi-Chin, but I know there's a lot of people in the community that are saying, because of what they don't understand about the play and the market and the analytics of the market and the fundamentals of the market, and they listen to a lot of FUD channels that claim divinity and so much info and professionalism and fundamentalists and all that, they get to a point where they're confused themselves and think that $6 or $5 or $4 is more than enough for the stock, when that really walks straight right into the spider's web that the shorts have been trying to tell you for about 3 years. Your stock is worth $5. Your stock is worth $3. Your stock is worth $1. Now it's worth a penny. And we don't listen to them, but we listen to the puppets that take that Kool-Aid and you put them in a pedestal. And now the people that you don't listen to, which is these shorts, hedge funds, all the system that we're up against, they have formed intermediaries, and those intermediaries are those very people that you put on pedestals, and you're taking incoming from them. That's basically where this community have gotten. Not all of it. We got a lot of support. We got a lot of love. As you guys can feel in my tone, I don't like to do this breakout golden cross or short cross, because I know there's a lot of people that do love to pump and dump into the stock. And if you do out there, may God protect you, but AB don't like it. Again, this is a different stock. It's not meant for this pump and dump. But then there's a lot of people who love to let everybody hold the bag for them while they are enjoying the entry and the exit and the entry and the exit. But those are the very same people that would most likely miss out on the true gains of a short squeeze should an event take place, because they are going to be programmed mentally, get in, get out. When they see the next pump, they might think that it's the get out area zone around the $6-7, and then they would probably miss out on, who knows, hundreds and many more of dollars per share. And they would be completely at that point trying to run in and like chase after the stock, and they just would not have any place. Again, Yishen, I'm not saying anything that you are that person. This is just an opportunity for me to give that general statement out, but hopefully that explained the question. Even I understood that. What do you mean, Alice? You're a very bright individual. Only day trading on AMC is trading my 1 second. Man, I am not comfortable at all. Plus, I gotta get going real soon. Trading on AMC is trading my free ice for liquor ice. Just saying. Man, belligerent ideas. What do we do with you without you? Look at this. Tesla is getting massacred. What is this? What is this? Let me see. Look. It filled this gap right there. Wow, this is a clean one. Is it going to rebound from here? This is massive. Broke Ape, how are you doing over there? Belligerent Ideas, how are you doing? Wow. It's game time decision right here. It's crucially important for it to rebound from here. All right, family. AB's got to get going. I got to look at over a couple of trades with an open mind completely. I have to do a couple of things. Again, like my head is flipping from the allergies. Got to get some water. I got to get some food. Belligerent Ideas, puckered. Hopefully you understood a lot today, people and family. Hopefully you understood a lot about what's happening with the markets, what's causing the markets to act the way that it is and that it's acting. What is making certain, like, the SPY and the overall broad market act the way that it is and pump the way that it is. So with that being said, if you have any questions, please put them as comments after this video posts up. If there's any questions, put them on there, as that would be what I would talk about in tomorrow's live. I would break down these. I would answer those questions first, and we'll go from there. Bucket. Belligerent ideas. Let's look. One final glance at Tesla. Let's see. It chose that as support. Look at that. We drew this line together. Look at this. If it's rebounding, that's massive, massive, massive for anybody who's getting into Tesla at this point. They would have the biggest upside walking into these earnings today. But of course, if this doesn't get respected and it breaks underneath, we are going to be watching for a probably a breakdown from the trend, and God knows at that point it could be 289 next. From here, that's the next level of resistance that I see that is major, or support, sorry. So with that being said, much love, Bro Cape. Much love, Alice. Thank you so much. Thank you so much. And we'll talk more. If you guys have any questions about AMC, or if you have literally any question that you want to understand or want me to elaborate on more, or would like my opinion on it, besides, you know, what price can it go to? Will something win Lambo and all that stuff? You know, you can feel free to put them in as a question on the, as a comment on the video when it posts. I will look at it tomorrow. I beating Kenny's pool. Casey, I just saw your comment. I'm gonna go have a talk with CSI with the F. Oh, okay, I see. Casey, let me see your comment first. What is the comment? Okay, I see. Well, again, one thing I will finalize this stream with, family, is there are characters. Every individual have a purpose in this life, okay? The more that person knows what their expectations are, what their limits are, the more successful they can, because they can squeeze out most out of their potential. With that statement being said, every person plays a role. The fact that sometimes somebody plays a role other than the role that they can play, or who they really are, would only hurt them or hurt others around them who listen to. Now, here's the thing. Some characters, all they're good for is hype, this. Like, for example, I seen that comment, Casey Hawk. I've beating Kenny's pool. I seen that. I'm not going to get here and start talking crap about this person or that person or that person. CSI is a bright individual. Now, and I love CSI. You know, we and him have a lot of talks, and we're brothers. I consider him as a brother. Now, the other individual that was mentioned in that comment, as far as whatever his name, Phil, if you see when you look at that channel, or when you look at that individual, the only thing they have to offer is literally nothing else other than entertainment from a comical standpoint. It's labeled as a stock channel, but I haven't seen any stock talk in it. All I've seen in it was videos of whether music, whether you see it as good or not. I don't know. I'll leave that to you. I'm not here to listen to hip hop or anything or any kind of music. When I go look for stock, when I'm looking for stock, I'm trying to get stock talk. And again, I know right now I'm already going into the zone of bringing something down or someone down. I know what that person does and that individual does, but that person is literally all they're good for is that, and they know it because they can't get into actual stock talk, but they're benefiting from the stock community because that's where they can flourish best. I don't see that channel going into hip hop channels and making it in that range, because it's very I'm a hip hop fanat and I listen to true hip hop. I'm talking about like real big artists. Like, and I come from the real age of hip hop, like the people like Nas, Hova, all these people are it's individually extremely and it pains me to break it down like this because I don't like to talk about people. I'm not talking about people. I'm just giving everyone else in the family here how to take things at face value. Just take it at face value, keep moving. The worst thing you can do is give a clown their what they're aiming for, or what they would like to aim for, what their true intention. Give them the show. Give them the platform. A clown's always going to play in the circus. It doesn't mean you have to attend the circus. Let the circus do its thing. You do your thing. I'm talking about stocks. You looking for stocks. Why are you looking next where? Why would it even bother you what somebody is making fun of about somebody else? Why would it even pertain to you if somebody's making fun of the no voters or the yes voters or whatnot? At the end of the day, you're in this for your investment. Does all that fun making affect your investment? It does not. It affects emotions, but you're not supposed to be emotionally driven. So let every person prosper in their category and in their realm, and you flourish in yours, whatever that realm is. With that being said, people, much love, AB Investments, and I'll catch you guys later. Put your comments and questions in the comment section in the video after the video post or the live post. And with that being said, I love you all. Have a great rest of your evening, and I'll catch you guys tomorrow.